Alright guys, we're here today to talk about a health savings account. And a health savings account is a great way to pay for medical expenses with pre-tax dollars. So in order to qualify for this, you have to be enrolled in a high deductible health insurance plan. So what is that? A high deductible insurance plan is an individual plan that has a deductible of $1,400 or more, or for a family that deductible is $2,800. And the traditional way of using this plan is you put the money in and you get a tax deduction for it, saving some money. And then over the course of the year, you spend your money on medical expenses, doctors, dentists, eye appointments, medications, even some over-the-counter medications or qualify for these expenses. But what we want to talk about today is maybe changing the mindset of that just a little bit, and let's use a health savings account as part of our retirement plan, as it's a great tool to put money away tax-free, let it grow tax-free over the years, and actually pull the money out in retirement used for medical expenses and paying no taxes at all. If we pull that off and we use it properly, this is possibly a better tool than even a Roth IRA. So let's talk a little bit about how much you can put into the plan. For an individual health insurance plan that qualifies, you can put up to $3,600 away into a health savings account. For a family, that number goes up to $7,200. And if you're lucky enough to be 55 or over, you can add $1,000 to those amounts. So let's think about that in terms of $7,200 for a family of four at a 20% tax rate. You're going to save $1,440 in taxes. What a great opportunity. And we'll talk more about how to use those funds better in a moment. I like to talk about the triple tax savings you get with a health savings account. This is the only part of the tax code where you literally can save money in a lot of different ways. So number one, when you put money into a health savings account, you save money in taxes up front. It's not when you spend the money, but it's when you put the money in. So we put that money in, we're going to get a tax deduction right away. Then over the years, the income, dividends, the growth, we're going to invest this just like an IRA or a 401k. You're going to put that money in. All that growth is going to grow tax-free, so you're not paying any money on interest, dividends, capital gains, etc. Third is when you pull that money out, and again, we're going to recommend we leave the money in the health savings account and use it like an IRA or 401k. But when you pull that money out in retirement, we're going to talk about what happens when you turn 65, all that income is tax-free. So it's the best deal you get. You get a tax deduction up front, and then you're not going to pay any taxes on withdrawing those funds if we use them properly once you get to age 65. It's triple tax savings, and it's a great opportunity we should all take advantage of. So what happens when you put the money into your health savings account? If you're like most of us, you put the money in and it just sits there. You might spend a little bit of medical expenses here and there, but for the most part your money's just sitting there, and frankly it's losing money to inflation, which is not a great thing. So what I want to talk about is another option is to put the money in, let's invest that money, and let's invest it like an IRA or Roth IRA, and let's have that money grow and grow and grow tax-free forever, okay? The third option a lot of people do is they use them for medical expenses, which is the primary purpose of this account. But if you're able, and I do stress that, if you're able to, I'd say let's not spend that money on medical expenses. Let's spend other money on that. Let's even use a credit card to pay for those medical expenses. Get your 2% cash back. Pay the card off at the end of the month, obviously. But let's pay for those medical expenses now out of other money we have in our accounts, and let's let those dollars grow tax-free as part of our retirement strategy moving forward. All right, so if you're able to let those funds stay invested and grow tax-free and grow and grow and grow over time, what happens when I get older? Okay, so the unfortunate reality for all of us is that as we get older, our medical expenses are going to increase. So we know that as we age, we're going to spend more and more money on medical expenses. So that funds, as part of your retirement strategy, can be used later in life, and we're pretty much guaranteed we're going to be able to spend that money. So that's an important thing to know. All right, so we're going to target the age of 65 in our analysis here. So what happens when you turn 65? A lot does, actually. It's not quite as cool as when you turn 21 or any of the other great ages we hit, or 16, right? The big 16. But 65 is a big age. That's the year you can join Medicare. So on age 65, you join up for Medicare. You can use your HSA funds to pay for those Medicare B and D premiums. So those are expenses you're going to pay for. It is hard to get excited about joining Medicare as a big deal, but it truly is in the financial sense of things. So the other big thing that happens when you turn 65 is those health savings account funds turn into account just like an IRA. You no longer have to use those funds for just medical expenses. Prior to age 65, if you pulled money out and used it for something else, you would pay taxes on the earnings and you would pay a 20% penalty. Once you turn 65, your health savings account literally turns into an IRA or a Roth IRA. Let's dig into that a little bit more. What I mean by IRA is that you pull the money out just like you would out of your 401k or IRA. You're going to pay ordinary taxes on it based on your tax rates, but you can use the funds for everything. If you use the funds for medical expenses, we're going to treat it like a Roth IRA, meaning there is no taxes paid on that. So that's the real advantage here. You're going to put money in when you're in your high income earning years. You're going to save money in taxes at a higher bracket, and you're going to pull that money out in retirement when you're not making other funds and using tax-free dollars to help pay for these expenses we all know we're going to get hit with. So it really is a win-win and something we should all be looking for and planning towards. Everything we just discussed, I just want to point out that a health savings account, or an HSA as we call it, is a very underutilized tool that we should all be taking advantage of. If you're eligible, we should really look into this. Let's get that money put away. Let's save the tax dollars. Let's get that tax-free growth. If you have any further questions about this, please reach out to your team at Eger CPA, and we're always here to help. Thanks and have a great day.